Hello, everyone. Welcome back into this new year. I hope you guys all had a wonderful Christmas and New Year break. So in this new year, we are going to come up with another interesting topic for you guys as part of the FinTalk series, and it's about updated ITR that is something new that the government has put forward this year. So CA Santosh Pai is here, and as usual, we are going to hear from him how this is going to impact and what new things are being brought up by the government. So over to CA Santosh Pai now.
Thank you, Mr. Raghunath. Hello,
Yeah.
viewers. Happy New Year to you all. This is the first FinTalk of this new year to 2024. And we are talking about updated returns under the Income Tax Act. We know that
Yeah.
after the due date of filing of returns and all that, we were not supposed to file our returns earlier. Now, within 2 years, we can file our returns after the due date of normal returns. So this 24 months we get to file updated returns. And if we file within 12 months, we'll have to pay additional tax of 25% plus interest. If we file after 12 months, but before 24 months, we need to pay 50% additional tax and interest thereon. So now 21 March returns can be filed now with 50% additional tax within 31st March 24. Similarly, we can file 22 March returns. We can file by next March 25 with 25% additional tax plus interest thereof. And 23 March returns can also be filed now. Since due date is over by 31st December, we can file now with the 25% additional tax for which we have time till next March, that is 25 March. So with 25% additional tax and interest, we can file 2 years return now, that is 23 return as well as 22 return. Suppose you file the 22 return after this March, then you'll need pay 50% additional tax. So plus interest. And this is covered in 139A, and there are certain conditions like loss returns cannot be filed, you cannot file refund return, you cannot update an updated return. Suppose you already filed an updated return, you cannot update again. So some certain restrictions are there under 139A section. Similarly, all this payment, etc., is covered by 140B. Section 140B covers the computation of additional tax, interest, etc. And 140B, we come across two situations, that is clause 1 and clause 2. And clause 1, there is suppose you are not filed your original return at all. You are not filed any return for that year at all. In such a case, you are filing the return for the first time of that for that relevant assessment year. In that case, you can file updated return, and you can claim whatever advance tax you paid, whatever TDS is there, TCS is there, you can claim, etc. You can claim, but you cannot claim 140A self-assessment tax as such. Suppose you have paid last December, you paid a self-assessment tax, but you could not file your ITR due to some error or some technical errors and all that, or some this CPC portal, IT portal, not filed, etc. Some due to some glitches and all that. In such a case, you can file your return now with the 25% additional tax, of course. Okay. Then 148 self-assessment tax, you cannot show it as such, but you can include in 140B. That's one scenario. In 140B, second scenario, where you already filed a return, original return you have filed, now you want to update that return, that item. You can do so. In such a case, whatever you paid in the original return, whatever tax you paid on the original return, you can claim now. And whatever additional tax is there, interest is there, you can pay under section 140B. Right? In 140B, there is no separate challan for 140A and 140B. It's only one channel. While filing your return, you show it appropriately. Here, one problem is that under that 140B subclause 1, we cannot claim 148 self-assessment act. That's a lacuna is there. Similarly, 140B2, there is also another lacuna that though I said earlier that whatever tax paid in the original return you can claim now, advance tax is not separately shown there. That's I think it's an omission. It's only a lapse. It's only omission while drafting the act, whereas intention is not so. Because when we file our original return, we must have claimed advance tax also, apart from your TDS, TCS, 148, self-assessment tax, etc. Okay, so
Okay.
that is not specifically mentioned. That advance tax is not specifically mentioned in 140B clause 2. That's an omission, I think. So, and after processing our 139 8-year returns, we come across various demand, unwanted demand, because of some processing error or something like that, because the interest calculation, there ought to be some mistakes in interest calculation, etc. They are yet to update their software. CPC portal, they have to update to process the updated return. That's a lacuna is there. We are filing. Then one more thing. Once we receive the orders for after processing one this updated return. After getting that, suppose we come across some mistake, some error, we cannot file a ITR, that rectification ITR cannot file as such, but we cannot upload another return again. You cannot revise your updated return. You cannot file a rectification return again, but we can opt for certain things like reprocess our return. We can also say that suppose there is a mismatch in our tax payment. Suppose whatever we paid not reflect in 20 years, we can say that there's a mismatch. So they can rectify to that extent only, not we cannot file another return, rectification return. That's lacuna is also there because they are not allowing this 154 rectification idea for updated return. And for updated return, there's also another problem that when you file this return, you will not get more time for e-verification. Normally, when you file a return, we get 30 days time for e-verification. For this updated return, there is no such provision. E-verification should be instant. Then only you will be able to file the updated returns. So that's all, viewers. So many queries might be there on this updated returns. So many I have clarified, and some more might come, and we expect that our IT portal will be soon equipped with the updated processing of updated returns. Thank you, viewers. Thank you, Raghunath, for your anchoring this show very well and all that. And I'm sure that we'll have more and more sessions, Win Talk, in due course of time, without much delay and all that. Thank you, Raghunath. Thanks a lot. Thank you,
Sure.
viewers.
Thank you so much, CA Santosh. It's an absolute delight listening to you again, and also learning from you a lot of pointers that are really new and very relevant for taxpayers. And it also provides an opportunity for someone who has missed out on the previous years as well. So it's an important update that you've shared here. And
thank you, Raghunath.
yeah, and as CA Santosh Pai said, so we are going to continue with this Fit Talk series and more to come, especially in terms of tax planning for business entities as well. So stay tuned, and we look forward to another episode shortly. Thank you.
Thank you, Raghunath. Please include our disclaimer at the end of the
Yes.
show. Thank you. Thanks a lot.
Sure. Thank you.
Thank you.